Good afternoon, everyone, and welcome to this meeting of the West Mercia Energy Joint Committee. My name is Councillor Pete Stoddart. I'm the Cabinet Member for Finance and Corporate Services for Hereford and the Chair of the committee. What I'd like to do is just remind you all that this meeting has been live streamed and recorded. And can we start on my left and work around the room and just introduce yourself, please?
Thank you, Chair. My name is James Walton, Executive Director and Section 151 Officer at Shropshire Council and the Treasurer for West Mercia Energy.
Nigel Evans, Managing Director, West Mercia Energy. Hello, everybody.
Gavin Owen, Head of Business Development, West Mercia Energy.
Julie Wassell, Head of Energy Procurement and Energy Services at West Mercia Energy.
Alex Riley, External Audit at WR Partners.
Councillor Zona Hannington, Cabinet Member for Finance, Governance, Customer Services for Telford and Wrekin.
Councillor Paul Davies, Cabinet Member for Communities and Civic Pride, and I believe name substitute for today's meeting.
Councillor Roger Evans, Cabinet Member for Finance, Shropshire Council.
Councillor Rob Warson, Deputy Leader and CMR with responsibility for finance and efficiency at Worcestershire County Council.
Councillor Rob Wilson, Orford Hod for Transport and Economic Growth at Shropshire Council.
Shelley Davies, Committee Officer.
Thank you all. And joining us remotely will be Adam Williams, who's the Principal Auditor at Shropshire Council, Richard Vaughan, Sustainability and Climate Change Manager at Herefordshire Council. Is anyone else come up? Okay, thank you very much. Agenda item 1 then is apologies for absence. We've got Councillor Ian Creswell and Councillor Ollie Vickers. Well, I believe yourself, Paul, you're covering for him, so that's great. On to agenda item 2 for the minutes. Can I ask if anybody has any points or observations regarding the minutes? Okay. Can I have a proposer and then a seconder of the minutes, please? Thank you, Zan. Anyone else? And sorry, Paul, seconder. Excellent. Can I have a show of hands to propose that accurate true? Thank you very much. Public questions. Have we received any public questions at all?
No questions received.
Thank you very much. On to disclosable pecuniary interests then. Has anyone present got any Class A, B or C issues they wish to raise at all? No. Excellent. On to agenda item number 5 then is supplier contracts. Turn across to, I think it's yourself, isn't it, Nigel?
Yeah, thank you, Chair. In line with our standing orders, we're obliged to keep a register where we contain any procurement activity of a certain type. There's nothing to report since the last meeting, Chair. So,
excellent, thank you very much. Okay, on to agenda item 6 is the statement of accounts for 24-25 and the annual governance statements for 24-25. I'll pan across to James for his report.
Thank you, Chair. So attached to the cover report is the statement of accounts for 24-25 and the annual governance statement. There are also following this, there are the items from external audit in terms of the audit findings report, which obviously covers the statement of accounts the same period, but also the internal audit annual report as well following that, which looks at the internal control environment across West Mercia Energy. So all 3 of those are important in terms of getting a feel for and an understanding for the accounts as they stand. In terms of the accounts themselves, they follow the usual statements approach. So there's a narrative report, there is the movement in reserves, an income and expenditure account, a balance sheet, and a cash flow statement. Over the year, prices increased over the year, despite them being below that at the start of the year. Volumes across the been managed by the organisation have increased, and we see those often shifting over the winter period, particularly in relation to the gas volumes. Over the year, the customer retention has been very strong. New clients taken on and retentions held on that basis, and there was the new supplier from April 24. Reference also made to the social value strategy. for the over the year, which was something work that was kicked off as part of that. The accounts themselves show that the overall profitability of the business is strong. Turnover levels relate to often to the value of the rates that are being supplied. So a fall in turnover is not necessarily a bad thing, but the overall profitability is strong. Cash position is very strong. Cash is held on behalf of a number of the authorities. And therefore they sit as effectively creditors within the accounts. But while we hold on to that cash, which is there for those to take through, we do earn interest on those, and therefore that is helps in terms of the positive overall position. So the annual governance statement is attached at the second appendix, and that annual governance statement demonstrates that there's no significant control weaknesses and strong governance across the organisation. So if this is considered, haven't to take any questions, but there is the opportunity to consider this alongside the internal and the external audit opinions as well, to ensure we get a rounded opinion in terms of those end of year statements.
Okay, thank you, James. Anyone get any questions they'd like to put to? Sorry.
Yeah, just one question. It's just really from my understanding. I'm guessing it's all correct, but why is the distribution to members higher than the net surplus? Why is the distribution to member authorities higher than the net surplus?
So the distribution to authorities, which we'll come on to a later. So the way this works is that the accounts are produced and there'll be a net surplus at the end of the year. That will feed into the balance sheet in the reserves position. From that is a retention is held, and then from that balance a payment is made out. That payment is made out in the following financial year. So what you've got is this mismatch between where the distribution is and the one that appears in the accounts. Does that make sense?
Any other questions to ask? Okay, so can I ask for a show of hands in regards to the two recommendations? Are we agreeable that we recommend go ahead with the two recommendations? Show of hands to agree, please. Yes. Thank you very much. And we go on now to external audit, the audit findings report 24-25. And I believe that Joe, you're going to give that remotely.
Yeah. So I'm Joe Pugh, Head of Finance and Billing at West Mercia Energy. The external auditors, WR Partners, have completed their audit for the year ended 31st of March 2025 and will present their findings to the Joint Committee. The Joint Committee are asked to consider and endorse the contents of the audit findings report. So over to Alex from WR Partners to present his report.
Thank you, Joe. Across to yourself, Alex. Thank you.
Okay, good afternoon, everyone. Brief introduction. I know we met some around the table before, but Alex Riley, Audit Director at WR Partners, firm based here in Shrewsbury. Purpose of our report really, as Joe mentioned, is to provide an overview of the audit process, and by doing so report on the findings from our audit work performed. There is the written report, which I will reference as I just quickly run through the findings. The audit findings memorandum starts on page 61 of the agenda, which has been sent through. So just starting on page 63, really in earnest, in terms of the overview of our audit process, in terms of where we are currently and where we started from. So during July, we performed our detailed audit process. In terms of our approach, we have not had to adapt or change our approach from when I was last at the Joint Committee meeting in March, where we set out our plan for the current year audit. So as I say, we performed our audit work in July. Timely and efficient audit enabled us to hold our initial closed meeting with management in August, on the 6th of August. A couple of follow-up items, which enables me to conclude our report and to present our findings to you today. Over the page on page 64, really is to touch on the materiality. Our audit findings are made in the context of materiality. So quick note here really that materiality relates to misstatements misstatements including omissions are considered to be material if they individually or in aggregate could reasonably be expected to influence the economic decisions of users of the financial statements. Materiality is an auditor judgment, but it is made in line with industry benchmarks. So as an auditor, you can see our final materialities at the bottom of this page, working to our overall materiality of 1.1 million. And again, that has not changed from our planning assessment as communicated in March. Again, over the page on section 2 of our report to report on the status of the audit and our auditor's opinion. And as previously mentioned, all of our work is now complete with no further work outstanding, and our expected audit opinion is unmodified. So in effect, a clean audit report. A few items to report to you, and again, just working through these. So on section 3.1, to report on the significant and elevated audit risks. So I've run through these in turn. So we have fraud through management of management override of controls. This is a presumed audit risk required by audit regulations under ISA 240. In terms of the report and our findings, you'll see a traffic light approach, and you can see here the green traffic light approach to conclude that we've not identified any matters to report. Another risk area, fraud through income recognition, is a presumed risk under ISA 240, and again, there's no issues to report here. Going concern, which I'll pick up on the next page, again, no issues to report, and we're comfortable with management's assessment of going concern. So turning the page onto page 67, which summarises our findings in relation to going concern. And really for the benefit of everyone here, going concern is the underlying assumption that the entity can continue trading for 12 months from the date of approval of the financial statement. So in effect, we're forward looking up to the end of September 2026. In terms of a process for going concern, management performed their assessment of whether the entity is a going concern. That includes forward looking at projections, future budgets, and some of the assumptions in there. From our perspective, we review those assumptions, which we've listed on this page. So things like customer retention, new contract wins, as well as ongoing trading conditions. We test those assumptions as part of our overall going concern assessment. Overall, we are satisfied that the preparation of the financial statements on the going concern basis is reasonable. 3.3, other matters for discussion, really for a point for transparency and for those who've seen the reports previously around the pension asset recognition. The pension scheme valuation does show a surplus position. Accounting standards require us where there is a surplus position to assess whether that surplus can be recognised, and accounting standards require us to restrict that asset up to the value of which any benefit can really be measured. In this case, back in 2023, we recognised the asset as part of a triennial review of the pension valuation. That has been unwound over the next 3 years, and so we're now in year 3 in the final year of that valuation, resulting in a decreased asset recognition of £98,000. And again, for transparency, that is the value of the expected benefit of the reduced contributions to the overall scheme being in an asset position. So again, really just to confirm here that there's been no changes from previous years and how that's been accounted for. 3.4 and the summary of key audit findings, really for us just to conclude on the position of any corrected and uncorrected misstatements. So as part of our audit work, when we're performing our audit testing, if we identify any errors or any balances which we can't validate, this is where we would report those to you. If they were material, we would have requested the financial statements to have been corrected. None of those have arisen, so financial statements are as provided to ourselves at the start of the audit, and also there has been no uncorrected misstatements, so any misstatements which material or not, management have decided not to correct because we haven't found any misstatements. So overall a clean audit from a numbers perspective. And then final 4.1 and over the page onto 4.2, other areas to note which I won't run through in detail. On the final page on 4.2, really a couple of items I just wanted to confirm. In terms of subsequent events, we're required to inquire whether there has been any subsequent events post year end which materially impact on the financial statements, obviously drawn up to the position as at the end of March. Our understanding is there have not been such events. And then really from our perspective, just to reconfirm our independence as external auditors from West Mercia Energy. At the bottom of page 71, we have also concluded under design and operating effectiveness of controls, and we have not identified any deficiencies or significant deficiencies in controls work from our testing. So overall, a very efficient audit process, performed to timetable, and no significant issues arising.
Okay, thank you very much, Alex. Any questions they'd like to raise, Alex? Go ahead.
It's not really a question, it's more a comment to pass on congratulations to the team to preparing a set of financial statements, which has led to such a positive audit report. So yeah, well done.
I'd like to mirror that and say it's very pleasing to see there's no unmodified or any deficiency comments, and it's lovely to see all the greens in there. So excellent. So on behalf of all of us, pass it on to your team and to the team at West Mercia, well done. So the recommendation we're looking for is the joint committee are asked to consider and endorse with appropriate comments the contents of the audit finding report presented by WR Partners. Can I ask for a show of hands if everyone agrees that we recommend that? Very much passed unanimously. And we move now on to the internal audit report. This time I think it's been given by Adam, who's given it remotely.
Thank you, Chair. I'm Adam Williams. I'm the Principal Auditor for Shropshire Council, and I'll be overseeing the audit plan for WME for 25-26, and will be presenting the annual report for the work completed for the previous financial year. If you do have any questions, I'll answer them during the course of the meeting. However, if there's any that need further clarification from the internal audit team, I will make a note of your comments and we'll get back to you.
Chair,
Turning.
I'm sorry to interrupt proceedings, but is there any chance we could have the recording transcription notice removed just so that we can see who Adam is? Apologies, Adam, you appear to be blocked on the screen. That's much better. There we go. Thank you. Thank you.
Brilliant. Okay, thank you. Turning to the report, this is the annual report we provide to the WME Joint Committee, providing our opinion on WME's control environment based on the audit work completed in 24-25. Point 3 on the report, agenda page 74, asks that the committee considers and endorses the performance against the plan for last year, that the system of governance, risk management and control is operating effectively, as well as the Chief Audit Executive's annual opinion on the WME's internal control environment for 24-25. I will now run through the key points of the report that I would like to draw to the committee's attention. Firstly, I want to draw to your attention that we have been able to offer WME for 24-25 a good opinion. Sorry, my notes have just gone a little bit out here. The opinion takes into account the audits undertaken on the financial systems as well as the IT audit work undertaken during the year. Based on this work, we are able to offer a substantial assurance that the company's governance, risk management and internal control processes are sound and working effectively. The committee should note that this is the highest opinion we offer and reflects the good work that is undertaken within WME for managing its controls. If I draw to the committee's attention at the bottom of page 77, this summarises the internal audit engagements that we have undertaken to support this opinion. We undertook 5 audits covering debtors, finance, corporate governance and risk management, procurement and IT utility system administration. The outcomes of these audits was reported in full to this committee in March 2025, including copies of those final reports. Members should note that none of the audits undertaken received an adverse opinion. The table summarises the number of recommendations raised, with 4 recommendations assessed as requires attention, which are raised to address minor weaknesses or housekeeping issues. And finally, I want to draw to the committee's attention the feedback that the internal audit team have received during the year. We have received 3 feedback surveys which have received positive performance scores. Any questions?
Thanks for that, Adam. That's very kind. Any questions, any committee members? Okay, can I say that's thank you very much. So that's very. Oh, sorry. Yeah, go ahead.
Sorry, Chair. I'd just like to thank Adam and his team for the work that they've done in preparing the internal audit report. I just had some questions, and it's probably because it's my first appearance at this committee. Of those 4 recommendations that have been identified as requires attention, are there action plans in place and are they being progressed?
All audits, when we complete our review and our testing, have an action plan agreed with management and they've all accepted that. We will be following up the recommendations as part of our audit work for this year, which is due to start imminently.
Thank you, Adam. Any other questions or points that anyone would like to raise to Adam? Okay, so going back down onto the recommendations, as he mentioned, just flip back to my page. So we've got 3 recommendations to consider and endorse. The performance against the audit plan for the year ended 31 March 25, that the system of governance, risk management and internal controls is operating effectively and can be relied upon considering the annual governance statement for 24-25, and the chief audit executive's substantial year-ended opinion on West Mercia Energy's governance, risk management and internal control environment for 24-25, based on the work undertaken and management responses received.
Can I move those, Chair?
Sorry?
Can I move all those
Sorry.
on block?
Yep, thank you. Yep. Can I have a show of hands, all 4? Yep. Unanimous, thank you very much. And now we go on to agenda item number 9, distribution of surplus. Back to James.
Thank you, Chair. So distribution of surplus. So this is just to agree the surplus and how that gets distributed amongst the owning authorities. So over the year in section 4.1, you'll see that the total general fund balance is 3.885 million. So that's what's been built up in terms of the profitability from each of the years, including the last financial year. The short table there then shows a recommended surplus of £2.182 million, leaving a general fund balance of 1.703. In section 6, where it talks about the retention of the surplus, that explains where the 1.703 figure comes from. So as part of the basic running of the business and ensuring that there is enough resilience within the organisation, a figure of 1.603 million has been identified in terms of capital at risk for gas and electricity, and £100,000 as a general reserve. So those are reviewed every single year to see what the level of those should be, and that's then taken off that distribution, that balance level, I should say, and that leaves the figure of 2.182 million. In the section just above that, in 5.2, this talks about how the distribution formula works, and it's set out there, but just to keep things really, really simple, basically any profit that's generated from business that comes directly through the owning authorities get their relative share of that business. That profit goes through to them, and everything else, whether it be profit from organisations outside of the owning authorities, the costs associated with those, or any other adjustments that are made, are split 25% a quarter to each of the owning authorities. When you apply that to the £2.182 million in table 3 at section 7.2, it then demonstrates what the distribution of that is. So Herefordshire is just over 500,000, Shropshire 571, Telford 561, and Worcestershire 548. So the reason fundamentally for those differences is the amount of business that each of those authorities have put through the books of West Mercia Energy. So the recommendations are therefore just to agree the retention levels and agree the surplus on that basis using that previously agreed formula.
Thank you, James. Anyone, any questions? Go ahead.
I can, Chairman. With your treasurer's hat on, I presume this is your recommendation to the panel or committee, whichever you wish to call it.
Any other questions or points to make? I'd just like to say that certainly from Herefordshire's perspective, that £501,000 is actually a very nice benefit that we don't often see coming our way. So it's well received. And I'm sure on behalf of the other finance members across, we can all say thank you very much and please keep up the good work.
Can I echo those sentiments with interest?
And now we just come on to the requirement to pass to approve the recommendations. So we approve the retention of an accumulated surplus of 1.703 million and approve the distribution of accumulated surplus of 2.182 million in accordance with the provision of the joint agreement. Can I have a proposal? Thank you. And all in favour? Passed unanimously. Now move on to item 10, the risk management update with Nigel.
Chair. So in accordance with our risk management strategy, I'm obliged to bring to this committee any medium and high risks identified, 2 of which have been identified and they're outlined in the table of 5.4. As a management team, we review the risk register twice a year, and our most recent review resulted in 71 highlighted risks. Most of those have mitigation in place to bring them to an acceptable level, but despite that, we've got 2 that remain. Let's say they're highlighted in 5.4. The first one relates to our trading. The likelihood is determined to be in rare occasions could the capital risk be exceeded, but if it did, it could be have quite an impact on our risk matrix that ends up as medium. So it's inherent medium risk through how we trade commodity within the year. The second one relates to loss of business due to a central government initiative, and this has been on there for some time. I have actually increased the likelihood to from a 2 to a 3, but it still results in a medium risk. We are seeing in a number of areas, central government areas looking to softly mandate how departments procure their energy. So we've seen that in the NHS section, blue light recently, and with the DFE as well. So it's something that we're keeping a close eye on. We believe our offering is preferable to that being promoted. So if that we do get inquiries from customers who've had their head turned at all. We address it on a one-for-one basis and encourage them to remain with us. So we'll talk about it in a bit more detail in the business plan update. But those are just the 2 risks that we view to be medium. Happy to take any questions.
Thank you, Nigel. Any questions or observations? Again, Councillor Watt.
Yes, so you talk about constant review. How constant review? How constant's the constant?
So we formally review it twice a year, head of this committee. However, risk management is embedded in the business really, both on our trading side and myself and Gavin on the business development side, where we look at opportunities, but also look at where there's threats as well coming from the market. Absolutely. Yeah.
Okay, thank you. Any other questions? What I would like to say is, Nigel, is that in some other work I'm doing with a company out at Leominster, we're noticing that CCS require social value papers and carbon reduction plan to be approved on your website before you can actually go through CCS to get work. So again, it's that more wider basis and acceptance by the government of the responsibilities of carbon and are approved to 2035. Okay, so thank you very much. No other questions. So can we then look at the recommendations, which is the joint committee are asked to consider and endorse with appropriate comment the medium risk presented, no high risk identified. Can I have a proposer? Thank you, Jeanette. And seconder. Okay, all in favour? Passed unanimously. Thank you very much. And now we're going to item 11 for the exclusion of the press and public. Is any press or public to exclude? You confirm the live stream is off.